Well, the Aussie share market is having a negative Friday session as expected, losing 1.7% in the first hour and a half of trade as global equities re-entered negative territory overnight. And now the Aussie benchmark index, the ASX 200, has erased yesterday's 1.1% lift and looks like it'll close the week lower. But over the past 12 months or 15 months, the market is still holding on to a 14% lift, which is the chart that you can see behind me. All sectors at noon are in the red, but there's plenty of pockets of gold, including gold companies as well, particularly as the gold price surged to a one-week high overnight, almost hitting $1,700 an ounce. Meantime, we did see US stocks lose over 3%, erasing Wednesday's gains as coronavirus continues to put pressure on short-term global growth. Treasury yields sank to new lows as investors seek out portfolio diversification, seeing a surge of funds into those safe haven government bonds. Some ideas of what to watch today. Well, Sonic Healthcare is one of the best performers, up about 4% after it was upgraded to a buy by Citi, while several directors at the company increased their holding in the healthcare and lab testing business. It's a well-managed firm with strong balance sheets and almost $1 billion of headroom, so potentially more upside for acquisitions. Another health business, skin repair business, Avita Medical AVH, was upgraded by Bell Potter following their recent share price pullback from multi-year highs. The stock was upgraded to a buy with an 83-cent price target. It's currently at about 64 cents after enrolling first patients into a pediatric soft tissue burns study, and it will expand that following a capital raise. UBS has upgraded the property business Goodman Group, GMG, with a $16 price target after rising over 3% yesterday to $15.65. And GMG has also outperformed the market year to date. It's up 14%. Meantime, Myer, the department store, their shares continue to come under pressure. They're down over 30% year to date, and that includes the 4% drop that we saw yesterday after Myer announced sales fell over 3% and that it closed its clearance floor business and cut staff numbers after losing the Apple and Country Road businesses. Citi, however, is contrarian, holding Myer as a high-risk buy, noting it could grow over 50% in terms of share price performance to 55 cents as they continue to slash costs and invest in the online business model. And lastly, the Australian dollar is holding around 66.12 US cents.